Ladies and gents, welcome back to another Engineers podcast. Today I'm joined by John Kelly. John Kelly is EVP of Technology and technical co founder of a business called Envelop Risk. Envelop Risk are doing some pretty awesome stuff that we're about to uncover in the cyberspace. So, what they like to call is data driven cyber underwriting. We're really understanding how they apply some of the ML models and AI to simulate the risk of cyber attacks, to understand the risks to businesses, which is a hot topic. It's a poignant topic. It's one that a lot of people are talking about at the moment. So we've got John here, who's going to be talking to us a little bit about Envelop Risk's technology and what they're doing for the space. So, John, thanks for coming to join us. First and foremost, how are you?
Yeah, thanks very much. Happy to be here. I'm doing all right. How are you today?
Always good. Always positive, never
Great to
negative.
hear.
John, talk to us a little bit about your role as technical co-founder in the business, and then give us a really good elevator pitch on who Envelop Risk are.
Sure. So I'm the original architect of our cyber risk model, and what that involved essentially was pulling together what data was available, building a number of machine learning based models to be able to predict various components of cyber risk and running a massive simulation using those models to more effectively be able to price and select risk for cyber insurance, in particular for us, cyber reinsurance, which is effectively insurance of insurance portfolios. So we're there to protect against those large catastrophes that might affect an entire portfolio. And really, what drew me into this from the beginning was seeing an opportunity on the technical side here to pull together my own background and skills in machine learning to an area that was hungry for this type of technology, and bringing that together with insurance natives, people who really knew the space, knew the data, knew the types of outputs that were needed, which is always just incredibly important in machine learning, rather than having one of these things where we think we can just toss the data in and spit out some numbers and throw them over a wall.
Okay. As a tech co-founder, how do you spot an opportunity like this in the market?
I think it's those two ingredients: is having the technology to be able to do something new and exciting. At the time, machine learning and AI was really at this stage where it was first starting to get applied to real world problems and solutions. I had previously spent time as the technical lead for corporate data analytics at Lockheed Martin, where I effectively acted as an internal machine learning consultant, going and trying to infuse this technology in programs across the corporation, many that had been operating the same way for half a century. And so you have to have that problem that the technology can solve, but then also you have to have the right product market fit. You're never going to develop something that is just some neat trick or fancy piece of technology that does not serve an actual need and does not solve a pain point for the customers. We like to say we need things that are painkillers, not vitamins. That they have to really solve a problem rather than just producing some benefit that people may or may not be interested in.
Yeah. You've obviously built something incredible because the rate of the growth of the business, the amount of funding that you've received, it's needed in the space. Do you build the technology first, or do you work backwards from the product market fit and understanding what the market needs, or is it a mix of both?
It's a highly iterative and collaborative process. When we first got started, we had our chief underwriting officer who knows cyber risk, who knows reinsurance. And then we had me on the tech side. And there was a lot of us getting in a room together, locked in there for the day, and really understanding me learning the reinsurance terms, what is really needed for him to do his job more effectively, and him learning what the capabilities are, what is actually possible, and what sort of data and feedback is needed for that. And even after you develop that initial product, you have to have that continual feedback loop with the end user, whether that's an external customer or an internal user.
Yeah, okay. Love that. Thank you. Give us a really good elevator pitch on who Envelop Risk are, the problems that they're solving in the space today.
So we were founded in 2016, started doing business underwriting our first reinsurance contracts in 2018. We have now grown to the point where we are the global leader in non-proportional cyber reinsurance, which that's a bit of a word soup there. What that basically means is that, again, we're offering those contracts that protect insurers against large catastrophes that might affect their whole portfolio. Take, for example, the recent CrowdStrike disaster that happened. And so we pulled together the technology innovators, AI experts, software engineering experts, and we have a great team located in Bristol in the UK. And the other side is also having insurance natives, having the underwriters on our team that know the space, that can actually do the deals that drive our business, and again, being able to provide that critical feedback that allows us to continually improve our technology and expand what we're capable of.
Ensuring and protecting the insurers, right?
Effectively, yeah, and that's insurance. Before I got into this space, I didn't realize how many layers deep it goes. There's insurance of insurance portfolios, and then there's retro, which is insurance of the reinsurance, and it keeps going until eventually you hit government backstops and all sorts of things that are there as nets to protect against these potentially catastrophic events.
Yeah. And there have been, you mentioned one, obviously, we're early August now, we're talking about this, but the CrowdStrike one will spring to everyone's minds. These things do happen. These things do happen. And that's what I really like about your technology. And I really want to try and dive into, as much as we possibly can, of course, some of the technology that you've built and what that technology actually does for your customers. So, can I give the mic back to you, and specifically talking about some of the machine learning models and AI to really simulate the risk of attacks? Be good to break that down for the audience.
Yeah, absolutely. And so, one of the big challenges in cyber risk, and why this space was such a good opportunity, is it's quite different from more traditional lines of insurance. We're dealing with something that there's not a lot of historical data out there relative to things like earthquakes and hurricanes that have been, happening since the beginning of time. The data that is out there, it's largely incomplete. We don't get a full in-depth view into every single company's cyber posture, what tech they're using, what vulnerabilities they have. We can get a surface view of that, especially as a reinsurer. And then also the data that's out there quickly goes obsolete, because one unique aspect of cyber risk is that we are dealing with an active adversary. Hurricanes don't care where they go. They're going to go where they go, regardless of anything else. And in the cyber world, that's not the case. Anything that we do to detect or predict or mitigate what the cyber attackers are going to do, they are going to change their tactics to try to get around that. And so we constantly have to be adapting our models to keep up with them, to adapt to their changes. And that's a big part of where the AI and the machine learning comes in, is being able to rapidly ingest those massive amounts of new data, update the models, and respond to those changes. And some of that is based on data that we have coming in. Some of that is based on integration with human expertise, where there are some things that simply the data isn't available, and we do have to rely on human experts who know the cyber risk and cybersecurity landscape to be able to offer their input and their intuition on what is happening and how they see that developing. Because again, we're not interested in building models that predict what happened last year. That's useless for us. We need to predict what is going to happen in the coming year, which is a very different problem.
Okay. And in that moment when you're trying to predict what's to come in the next year, what exactly are you looking to assess with your technology?
So, as a reinsurer, we have a number of additional challenges there. In primary insurance, you're working closely with the companies that are actually insured, so you are able to get more of a look at their internal cyber posture, some more details on that. You also know who you're insuring. As a reinsurer, we're effectively having to predict who our clients will be insuring and what those policies will be, and then doing surface level information gathering and prediction of those companies, since we're effectively an arm's length relationship with them. And so we have to build uncertainty into our model. The less data that a client provides to us, the more uncertainty that there is going to be. That's going to be reflected in our models and our probability distributions that we use, and ultimately the risk profile that that client has. We also have to, again, since we're so focused on large scale catastrophic events, we have to deal with being able to predict what we call tail events. These disasters that might only happen once in 100, once in 1,000 years. But we have to account for those because they're so massive. Even though the probability that they happen is small, the severity, if they do happen, could just completely cripple us and our clients and everyone else in the industry if we don't properly account for them. So that's another huge piece of our modeling, and that has to, again, take into account threat intelligence. It has to, this is where we use a lot of generative modeling in AI and some agent-based simulations to be able to generate that sort of those what if scenarios. What is the worst that can happen? What can happen if any of these changes in the threat landscape occur? Because to be honest, we haven't seen what I would really consider a true cyber disaster yet. Even the CrowdStrike event. I mean, that was bad, but it was not, the Hurricane Katrina of cyber losses, where Hurricane Katrina 20 years ago completely devastated the city of New Orleans and beyond, and was just an absolute massive loss for the insurance industry in that space.
Do you think we'll see one of those?
Oh, certainly. If I thought we wouldn't see one, then we wouldn't bother modeling them. I think that there
That is true.
are there are a lot of these sort of apocalyptic scenarios that people toss around, and we do have to guard against being overly conservative with a lot of those, because if you start to take those into account, then really that in itself already cripples the industry just with the amount of capital that needs to be stored and held on to protect against those. And these are things that, it's like, what if all of AWS and GCP and Azure, all their data centers go down all at once? And there are a number of reasons that can't actually happen, but also if that does actually happen, then we're probably in a post-apocalyptic world, and money has no value, and there are much bigger things to be concerned with than an insurance policy.
Yeah, 100%. That is a very good point. It would be really good to break down what it would be like on a day to day, week by week, just purely from an engineering perspective, what an engineer would see in the day of a life of at Envelop Risk. We've spoken offline about large research angles, data ingestion, scaling systems purely from a computation perspective. It would be really good to try and understand some of the engineering challenges that you guys face when building some really good technology.
Yeah, absolutely. We have a full pipeline of technology for the full life cycle of reinsurance, everything from data ingest to tools for our underwriters. Uh, in AI and machine learning, people who love, well, I wouldn't say love to ignore, but the data ingest part is often ignored because it's not the fun part. It's not the sexy part. All of the machine learning algorithms, that's what everyone wants to do. But it's garbage in, garbage out, and we have to do a lot of work to clean that, standardize that. One of our biggest challenges there is the company matching process, where these portfolios we get from our clients still have company names listed, but they might be misspelled. They might have stop words like incorporated or LLC added. They might be subsidiaries of a parent company. One of my favorites is examples is Hungry Jack. It's in Australia. Burger King is known as Hungry Jack, effectively because some bloke there owned the trademark for Burger King and refused to sell it to Burger King. And so things like that, you're not able to match the company names just based on the text. And so we have to do a lot of semantic matching in order to be able to join these companies. What we get from the clients, it'll include the company name, maybe some company fundamentals, the policy information, but to effectively model the risk, we have to match that company to all of the other data that we're gathering. The cyber posture analysis, financial data, market segment, and other firmographic information, social media, all of this that we're pulling together from the web and our other data sources, we have to have a key to join that together. And so that's an extremely critical part of our process. It's a difficult process when we're looking at doing this for millions of companies. Some of these portfolios that we get can have millions of companies, ranging all the way from Fortune 50 companies down to mom and pop shop on the corner with 2 employees, and we have to be able to effectively join those and do it quickly. So there's not time for going through and manually matching each of these. So that has been a big challenge for us, something that we've made big improvements there, using some of the building blocks for LLMs to effectively do semantic searches that are looking for really places in these giant corpuses of text where a company's name has been used in a similar context. And we've had some very exciting results from that, and have really been able to improve just the cleaning and standardization process of our data, as well as the scale at which we can do that. And so that's really the first part is standardizing, cleaning, and enriching all of this data. I'll pause there, I guess, before I go on to the modeling part, which is the more exciting piece, and what I focused a lot of my initial time on when we initially started the company.
Is it fair to say that LLMs and AI have really driven your business forward in the last 12 to 18 months since the rise of them?
So LLMs have certainly been another valuable tool in our toolbox. Again, we're not necessarily using them directly in the way that people might see or think. We're not directly using ChatGPT. We're using some of the underlying technologies that enable things like ChatGPT. So it's been useful for the company matching. We're currently looking at it for being able to more quickly and accurately extract key information from these giant PDFs that we get from our submissions, and being able to do searches on those. AI is, it's become I feel like it comes and goes as a buzzword every few years. I've been doing machine learning, data science, AI for over 20 years now. And, at one point it was just fancy statistics, and then it became machine learning, and then it was AI, and then data science, and then big data, and now it's AI again. But it's all effectively the same, different terms for the same math. And so we've been using machine learning for since the beginning of our company, and the initial models that I built. And that machine learning technology, to me, that's what, when most people think of AI, it's based on machine learning.
Love that. And I'm glad you put the record straight. I agree. I think the industry has changed a lot in the naming of what it is, but I like how you simplistically put it. It's just the same math.
Yeah, or maths even for the UK audience there.
Or maths for the UK audience. Let's move swiftly on to the modeling part. You think the sexier part of what you guys are doing. So talk to us about the modeling part.
Yeah, absolutely. So what I initially built in looking at cyber risk was effectively first taking cyber risk and breaking it down into its fundamental components. So rather than just saying, hey, is company X going to experience a loss of 200 million from next year from a cyber attack? That's at a high level. It's difficult to model. It's difficult to integrate human expertise and threat intelligence. So what we instead do is look at the fundamental components. We look at the frequency of loss for each company. We look at, if there is a loss, what is the likely economic severity of that loss? From there, we apply insurance and reinsurance terms on top of those. And then we also separately model attack type and characteristics, as well as coverage areas that would, again, feed into some of those insurance policy terms. And so for each of those, everything that we do is probabilistic. We're never looking to make these point predictions of, how many cyber attacks is company X going to predict going to experience next year. We are taking well-known, well-studied statistical distributions that fit the behavior of each of these characteristics of risk. So, for example, for the frequency of loss, how often do losses occur? We're using a negative binomial distribution. For the severity of how bad is this loss going to be, we're using a log normal distribution. And where machine learning comes into play is taking the training data that we have, which includes loss information. At this point, we have industry leading claim and loss information, which has been one big advantage of working as a reinsurer, is we see this data from across nearly the entire cyber insurance market, as well as all of this company information that are features that are going to be used in these machine learning models, where machine learning is effectively learning mappings from these features to our target variables, like how often will a loss occur. And the output of the machine learning models are going to be parameters for these distributions. So for frequency of loss, where we have a negative binomial distribution, the machine learning model is predicting the parameters for that distribution. That's again where uncertainty comes into play. If we have a higher uncertainty for a company, that distribution will have a higher variance. And then those distributions themselves are used in a massive Monte Carlo simulation where we are going to run through every single, again, these millions of companies in our portfolio, and we're running the simulation 100,000 times. So we have millions of companies, 100,000 simulations, insurance and reinsurance terms applied on top of that, and it is a massive computational burden to be able to do this, to be able to do it quickly in a scalable way. And so for each company, we're going to look at that frequency distribution and say, okay, how many losses did the company experience in this simulated year? And then for each of those losses, draw from the severity distribution, draw from the coverage area distributions, draw from the attack type distributions. And at the end, we're going to end up with a full catalog, an event loss table of every single cyber loss that has happened for every company and each of the losses characteristics for all of these 100,000 simulated years. And at the end, we then pull that back together to produce this distribution of loss that is going to tell our underwriting team what's the expected loss, what's the loss that's expected once in 100 years, and so on and so forth, all of these data points that they need to effectively structure and price their deals.
Wow, okay. How often are you running that simulation? Is this every time you engage with a new portfolio, or do you run it monthly? I don't know, to see if any data sources have changed.
So
I think
we're reporting monthly to our capacity providers. So we're at least doing that. If there are any big events, any big changes in the threat landscape that come through, then we're going to ad hoc run a new simulation on that. And we are also running the simulation when we have new submissions come through, which the frequency of those can vary quite a bit by time of year. January 1st is by far the biggest kind of renewal date for reinsurance. So things get quite busy in November and December. But each time one of those deals comes through, we want to look at marginal impact to our entire portfolio, or bordereau is the fancy French word that's used for reinsurance portfolios, because we care about, again, not just the expected loss, but these large scale catastrophic events, and how well diversified your portfolio is really has a big effect on that tail risk. and these low frequency, high severity events. Because if you have a bunch of companies in your portfolio that are all using the same technology or that are all likely to get hit by the same type of attacker or the same type of attack, then their losses are going to be correlated. And the likelihood that you have an extreme tail event is going to be much higher versus if you have these companies over here are likely to get hit by attacker A and are vulnerable to this particular type of attack. And these over here are more likely to get hit by attacker B and this other type of attack, then those aren't going to simply add up when you look at the tail risk.
Got you. Okay. I love how you've built, and you need to, something end to end from your semantic matching to your tooling, data ingestion, through to modeling. It seems like and your simulator, it seems like you've really built something end to end. I'm really keen to understand the next 12, 24 months. Where do you think Envelop Risk can go? What's in the realms of possibility for the business to continue growing? Could it be further in the insurance space? Could it be using your technology into a different market? I'm really keen to try and understand where the business is heading.
Yeah, absolutely. The most direct and obvious answer there would be other lines of insurance. What we've built here, our technology, our modeling, our data ingest, our simulation, what really makes it cyber is the data that we feed into it. We can easily feed other types of data for other lines of insurance into that system and operate quite well in those spaces. We have some unique capabilities that would definitely provide benefit to other types of insurance. We can also offer services to others in this space and beyond. Really, the company matching that I mentioned, that's a problem that companies everywhere face, not just in insurance. And we have everything that we do, we've done the make buy evaluation. And if there were an off the shelf solution for that that served our needs and was cost effective, then I can assure you we would have just bought it. So that's something where we can certainly provide that to others. But then also just continuing to improve what we're doing in cyber, increasing the appetite for investors in this space, continuing to get them comfortable and confident with it, because it is still a new space. There's still a lot of unknowns. One thing that I didn't mention in our modeling, but is actually a huge passion of mine and something that I feel like we've done quite differently and in a very novel way relative to traditional catastrophe modeling is in cyber risk. We have this problem where we don't really know all of the potential catastrophes, and we have what we call unknown unknowns. In most lines of insurance, we kind of know here are all of the really bad things that can happen. Here's how we model them. In cyber risk, so those are called scenarios, just simple rules-based scenarios, basically giant if-then statements. And those are very useful, even in cyber. They serve a very valuable purpose in determining exposure and risk to certain events. But we've gone beyond that, where we recognize that in cyber we don't necessarily know all of the bad things that can happen. For the things that we do know, we don't necessarily know all the parameters. And for even the things that where we know the parameters, we don't necessarily have all of the data to fill in the values for those parameters. And so our tail risk modeling goes beyond that to using generative AI to, again, pull together all of this information out there about the different types of attacks that can happen, and running that through an agent-based simulation where we're taking effectively all of our companies and building a giant network of these companies, and then releasing these little cyber attacks throughout the network and letting them run amok, and seeing what is the outcome from that. And so as a result, instead of having 100 disaster scenarios that we can look at, we're generating hundreds of thousands of disaster scenarios that could happen, and then being able to circle back to generative AI and some of this LLM technology to produce narratives around these. Here's the event that actually occurred. Here's what it looked like, and here's how bad it was.
Yeah, I definitely think that the insurance industry, I love that, by the way, what you've just said. And I love your example and the visual on the simulation. I feel I can really get what the business do. Um, I think the insurance industry are really open now to technological innovation, whereas I think it's been one of those industries that in the past maybe 10, 20 years has been slightly antiquated. But this is a really good example of where leveraging your technology can actually safeguard them in many, many, many different ways.
Yeah, absolutely. And there are definitely parts of the insurance industry that could use some improvement, some infusion of
That
technology.
with a bit of a
I
smile.
I also want to be clear, though, how valuable that human expertise and knowledge is. That is such a risk that I've seen over my entire career, where people think that, oh, I'm just going to train my machine learning algorithm and it's going to solve everything. Going back to really in grad school, I was researching brain computer interfaces, and there was a company that came out that uh, it was just a headband that you would wear, and it had two sensors here, and it was supposed to measure how much you focused and let you move a ball on the screen. Really, it was just measuring how much you went like that. Whenever you squint your forehead, squint your eyebrows, the electrical signals from those muscles completely overwhelms any neural signals that the sensors are recording. So if you don't have domain expertise, if you're just looking at the data, you see those big spikes and you think, oh, that's perfect. My algorithm will do great with those signals. And you have to have that medical knowledge, that physiological knowledge to know that, oh, hey, no, that's not actually what you're seeing there. And the same thing is true in the insurance space and the cyber risk space, and in anywhere that we are applying AI, we need to be sure that we are doing it responsibly and not just trying to, run over decades of human experience and intuition in those spaces.
Good awareness, though. I think it's needed, especially being a tech co founder. I think it's needed to build the right business, the right technology. So good. Um, I really want to wrap this up by understanding a bit more about your thoughts on what you think are the top three things that software engineers need in today's industry to thrive.
Well, I'd say one is that understanding of what you're working on. I think so many software engineers just want to write their code without fully understanding what the actual goal of the software is, of what it needs to accomplish. So for any software engineer or data scientist, you need to get that basic understanding domain of the domain, that basic domain expertise, to where at a minimum you can communicate with and understand the true domain experts, the true end users. And then you might be able to recognize where a software requirement doesn't make sense or could be improved or needs to be designed a bit differently. Another big thing that I think has been a big topic in the last year is is ChatGPT and other tools like that just going to take all the software engineering jobs? And no, it's not. But software engineers need to know how to use those tools to increase their own productivity, to increase their own efficiency, and their own skill set. I kind of liken those tools to uh, doing math with a calculator that occasionally likes to give you the wrong answer just to make sure that you're staying on your toes and really know what you're doing. And so, I still understand uh, algebra and you know calculus and whatever other math I need to do, but that doesn't mean I'm going to sit here and do it by hand. I'm going to use my calculator and my computer to do that. And so software engineers need to have the same capability. They still need to understand uh, how to code. They still need to understand the software, but there are tools out there now that can uh, really make things make them much more productive and make their own lives easier as well. Um, so I guess I've only given two, but I spoke on those a bit. I can try to think of a third if you want
No,
another
that's good enough. I
list.
think the second one definitely intertwines with more points than one, but I love the first one. Domain expertise, I think, is something that is underrated, and I see a lot of people talk about. Invest in really understanding what you're trying to build and why you're trying to build it. Um, and I think that's a new one to the podcast. So I love that.
And,
Um,
and actually, I'll go ahead and just add my third on top of that. It's just
Go
collaborate.
for it.
You've got to be
Yeah.
able to work on a team, and there's kind of that old adage that if you need 10 times more output, you can't just get 10 times the number of software engineers, but you've got to be able to work effectively with others.
The thing that I love that you keep on coming back to is that, funnily enough, the domain expertise and the human interaction with some of your technology that you've built, people having the knowledge of the insurance space has been incredibly valuable for what you've been able to build and still is. So I love that. I love it. It's almost like this full circle moment of they come back to your points of what's really important. So thanks for sharing that. This is a good opportunity for you to talk to a lot of people listening about the growth of Envelop Risk and where you'll be hiring into your business, tech, locations, roles. So talk to us a little bit about the growth of the business and what might be attractive for people over the next 12 months if it's not directly now.
Yeah, absolutely. So as I mentioned, our team is primarily located in Bristol in the UK. I was there myself for about 3.5 years. I moved there to build that team, and I hope it will forever be the greatest irony of my life that I moved across an ocean to build a team in person, and then COVID hit, and I ended up working remote for most of that time period. But our team is doing great. We have a new office there, and which I love to go back and visit. And so there are opportunities there in software engineering and data science. And a lot of what we'll be looking at in the next 12 months probably is in growing those additional lines of business and some of the services that we can offer. We do also have a team in London. We have a team in Bermuda that is primarily our underwriting team, but of course are always open to tech talent there as well. It's just difficult to get a work permit there if you're not already there. And we are open to other remote opportunities as well. But again, that Bristol location is definitely preferred. We will be rolling out our new website soon, which will be much more descriptive of our company and in terms of what we do. and what we will be, how we will be looking to grow and build our capabilities going forward. A lot of our current website is not that descriptive because a lot of our business is it is B2B, business to business, and it's largely relationship driven. So that's how we have done most of our communication in the past.
Okay, love it. For people listening, Bristol, London, Bermuda, if you already have a work permit, or it might make it a little bit tricky to get a work permit. Don't understand those details, but Bristol, London, technology, go and feature the guys. We'll go and have a look at some of what the guys are doing on their new website to come, especially if you're in the software engineering space and data science space. These guys and girls should be looked at. And I think John's given us a really good insight into some of the great technology that's being underwritten in our industry. So, John, big thanks for coming to join us on the Engineers podcast. We finally got there, but a thank you.
Yeah, thank you very much. I enjoyed it.
Good man. And for everyone listening, remember, likes, shares, subscribership, all of this stuff is massively, massively important to continue creating such a good ecosystem. So thank you guys, and please do. Thanks a lot, and bye for now.
Cheers. Thank you.
Hey guys, thanks for watching this episode. Massively appreciate you listening and checking in with us. If you want to find out more about us and what we're doing, please check us out on social media. What we're trying to do at Engineers is build a community to drive knowledge sharing and experiences. On Twitter, we can be found at Engineers.io. It's no underscore. We've also got a website, which is engineers.io. These links will all be posted in the description. Any feedback and comments are massively appreciated. We're always looking to improve on where we can. Thanks, guys.